Hello traders. This is the TSTW24 traders, TSTW SYS08 traders. Today is the 22nd of January 2011, and happy weekend to you all. We want to look at the USD yen currency pair, the currency pair that we title the crazy currency pair. We're going to look at the monthly chart, and then we move to the weekly chart and the daily chart to analyze the USD yen currency pair. As you have already known, we are bullish towards the USD yen, but we are now stepping aside, waiting for January to close before we enter our trade. Okay, this is the daily chart of the USD yen currency pair. Okay, I am quickly going to change this chart to 30 days. 30 days. Okay, 30 days. Monthly chart for you. Okay, this is the chart we were looking at. If you remember the pattern that I showed you before, the reversal pattern. Okay, for those who are following us for some time, one down. Okay, with this candle here, one down, one up, one down. Okay, now we are waiting for January to be up. Okay, and also beginning of the month, I was telling you that it will be nice for the USD yen to retrace back down a little bit. Okay, this is what's going on right now. So the market was pushing it down a little bit, which is perfectly okay. But we will expect the USD yen to recover next week. We will see next week how this monthly candle will be completed. We expect it to start going up the whole week big time. Okay, but if it continues the movement to the downside, we will have to wait again, okay, for another bullish candle. Okay, so the pattern that we are talking about is one down, one up, one down, and we are waiting for another one up. Okay, one down, one up, one down, one up. Okay, this is the one we are waiting for the month of January to be up. But we were expecting the USD yen to retrace back down a little bit. Okay, which means when it's going down again this time, this will allow other traders who have noticed that this currency pair is oversold to also join this bullish momentum. So this movement to the downside is very healthy to attract more buyers into the market who are willing to buy the USD yen at this price level of 8256. Okay, we also know the psychological level for the USD yen is 8300. 8300. That's the psychological level for the USD yen. So right now, our strategy this month is to step aside, okay, and to observe the price. But if you want to trade it one day trading. Okay, so this down move to the downside this month, even though it was going up first, which was a bit worrying to us because we prefer it to come down. Now it came down a little bit. We will expect beginning of next week to start going up. We will observe carefully what's going to happen. We are not trying to predict the price. We are not in the mood to predict the market. Okay, we are following the price. We are following the market. We will do our homework. Okay, do our estimation. By the end of the day, when the market opens, we will follow the price, the number one indicator. Okay, because a lot of new traders get into trouble when we are talking technical knowledge like this, and they get into one conclusion that we must sell, we must buy. Okay, no trader should approach the market with that kind of mindset and say, today we're going to sell, today we're going to buy. That's not the right approach. You must be neutral when you are approaching the market. Okay, allowing the market to show you the direction. It's pure arrogance to come into the market and say, we're going to sell. Okay, you will do your preparation. Your preparation will tell you to sell or to buy. But when you are approaching the market, you will open your eyes and be neutral. Okay, those who are predicting the market are consistently losing. I can assure you that those who are trying to focus the market are constantly losing. And you see very often when people are swing trading, they do their homework and they want to buy and they go and buy confidently at one point. Okay, they do not allow the market to show them where the price going. Okay, before they join the trade. So this is the pattern on the monthly chart: one down, one up, one down. We are expecting the USD yen to start rallying to the upside from next week. Okay, hopefully. That remains to be seen. If the market push it down again, okay, which is also possible, to not only see one side of the coin, see both sides. If they push it down, we have to wait another month again, because next week is the last month of January. We will expect this candle to refill this gap here and to close bullishly here. So this is about the USD yen currency pair. I'll quickly show you for the daily chart, what we are seeing on the daily chart of this USD yen currency pair, which are titled the crazy currency pair, because many professionals even consider this currency pair a bit difficult to trade, not because it was difficult, because of the hedging activity that is going on in this currency pair. But we have perfectly tamed this crazy currency pair, as you have seen now, and the market has become a bit stable, because there was a time before when people do not know where to put the dollar, and people were doing all sorts of things in the market, and it was a bit crazy activity in this currency pair. That's why we call it the crazy currency pair. Now many traders start realizing that this currency pair is still got a future, that they can perfectly trade this currency pair. The market is now more friendlier, okay, so to speak. Okay, so we will draw on this chart quickly, highlight some key point on this USD yen. We see on this daily chart an inverted head and shoulder in formation, okay, which means it's not yet completed, but it's being formed nicely here. Okay, we'll expect this as a TSTW24 trader. We have a filter to detecting the fake inverted head and shoulder, and also to detect what is the valid inverted head and shoulder. This one is not yet completed right now. As soon as it's completed, according to the rule of the TSTW24 trading system, if the TSTW24 trading system confirm to us that the signal is now ready, this pattern is valid, we will enter the trade. Okay, so we'll expect in this a crazy currency pair, as I like to call it. Okay, nothing crazy about it though. Okay, to continue to find a support in this zone here. Okay, and to start going up big time. Okay, as to find a final support. Hopefully, if there is no more market manipulation through news, okay, we want the people who are talking about the euro or this thing to keep quiet for 1 week, okay, and so that we can trade peacefully. Okay, we don't want people to be divagging, talking all sorts of things in the market. To be quiet, okay, and let the dollar, give the dollar a chance to go up. Okay, unless the Fed is not prepared for the dollar to start going up now, so which means the Fed may intervene one way or another to push the dollar down. Okay, I hope they are satisfied with the position on the dollar, because this is all politics here. So this is what we see now. Now, if the dollar, as I say, if the dollar found a support in this zone where it is now in the region of 8256, and we find more buyers coming to the market without any more market manipulation, any more crazy bad news coming from the United States, this dollar will continue the uptrend at least for 3,000 days. Okay, 3,000 days, that's almost 8 years. We will see the dollar going up steadily, slowly but surely, going up consistently for 8 years. Okay, so this is our estimation, our observation regarding the dollar is at a very important level right now. And also, when we draw on this chart, okay, very important, we draw the Fibonacci tool to know what is going on here. We can see clearly that the price retraced back down on this daily chart up to this level here. Okay, it touched the 78% Fibonacci retracement level, a very important psychological level. Okay, so we're talking about 78%. It's a very important psychological level also. But in a downtrend, because the price went down all these days, okay, retraced to the 78%. In normal condition, if the market consider the dollar as not healthy, okay, if the dollar is considered as a bearish currency pair that we should sell more, the price at least should retrace back to this level here. Okay, so usually that's what I want to show you quickly. I hope you are following me clearly what I'm trying to explain here. In normal condition, okay, when the price retraces up to the 78%, the smart money will usually check the fundamental. Okay, we check the fundamental. Okay, is it okay to buy this currency pair or should we sell? If there is a valid reason, a fundamental reason to sell after a downtrend like this, the professional, the smart money will sell heavily at this point here, bringing the dollar down to this level, at least to this point. But what we have seen here, those who saw the dollar here couldn't even bring it here. This is what we see now, okay, which is completely bullish. In fact, what we are observing here is a kind of a higher low being formed nicely here on this daily chart, okay, with this huge bullish candle. So we will see next week what will happen. Very interesting pattern here. From the 78% Fibonacci retracement level, they couldn't bring it down to this level here. We will see whether the market will decide to bring it down to this level of 8093 before returning to the upside. Okay, that's another scenario. They may decide to bring it here in the region of 8093 before bringing it up. Okay, but the way the dollar turned around here bullishly here does not confirm the bearish pressure here, because normally if there are more bad news about to come, the smart money will be willing to sell here, and will sell seriously to bring it at least to this level here. So we are in a kind of inverted head and shoulder being formed here, but we know that this formation is not yet completely completed. Now we will keep watching and monitoring this currency pair in order to participate in the bullish market that is about to begin for 8 years maximum for the dollar. The dollar will be going up for 8 years at least. Okay, so this is the daily chart, what we have seen on the daily chart. We'll go quickly to the 7-day chart. Okay, I will remove my drawing on this chart. Okay, so this is the 7-day chart. You see that the price was on a downtrend, went down, okay, and went down, okay, and came down to this level here. Okay, now for how many weeks now? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 weeks. The price could not, for 10 weeks, the price in this zone is not displaying any more lower low. Okay, so this is very important information for us to know that for 10 weeks the dollar couldn't display a new lower low. Okay, as you can see, many weeks it has been going down, but for 10 weeks now the dollar did not create a new low. This is a bullish information right here. Okay, very important information here. So as I said to you, we are stepping aside so far, but next week urgently we'll be looking for opportunity to buy the dollar, because that's the last week of the month. Looking at the monthly pattern that we talk about, one down, one up, one down, one up, this formation, one down, one up, one down, one up, the market retraces back down as we were expecting. We will see whether they will try to push it down to the level of 80 that I show you on a daily chart, or the market will decide to take the dollar to the upside straight away from here. So this is the technical analysis regarding the USD yen currency pair. If the dollar manages to find a support in this zone and the bullish momentum has begun, seriously has begun, it will last at least for 8 years, which means the yen will be going down for 8 years and the dollar will be going up for 8 years. I hope you enjoyed this video also, that you put into practice in order to cream the market consistently. We are the TSTWSYS 08 traders. Thank you for watching, and speak to you soon.